What a wild day in the markets. Again, as we were forecasting, we said that after the holidays, that's when you're going to start seeing things go down. And down they're going. But down they're going across the board, some of the board that we didn't see going down, just to make it clear. Woo! Bitcoin, Malone. As we're on the air, it's down 14.25% today, selling at $62,961, a fall of $10,500. That's a big decline.
In today's news recap, CME's sixth margin increase in this cycle caused spot gold and silver to continue plunging. The Chicago Mercantile Exchange has once again raised margin requirements, pushing silver prices below the 66.6 mark. On February 5th, local time, the CME Group announced it would increase the initial margin for its COMEX 100 gold futures from 8% to 9%, and raise the initial margin ratio for its COMEX 5,000 silver futures from 15% to 18%. During the Asia-Pacific session on Friday, prices continued their sharp decline from the previous day, breaking through several key psychological levels with a daily drop of over 7%. Spot gold fell more than 1.6%, dropping below the $4,700 mark. Over the past week, spot silver has retreated more than 40% from its all-time high on January 29th. On Thursday, silver plunged 19%, wiping out all its gains for the year, with market volatility reaching unprecedented levels, marking the most turbulent period since 1980. As previously reported by Wall Street News, when silver peaks, exchanges historically intensify regulatory measures, including frequent margin hikes. In this current silver market cycle, the CME's willingness to intervene has been exceptionally strong. Within just the past month, the CME has raised margin requirements 5 consecutive times, a frequency that is highly unusual.
4,776, but still up, from where it's been. It didn't hit its high. It's $1,000 low, almost lower than its high. But still, it's up there. But silver, took a whack. It's down today $17.26, $70.82. But of course, way up from where it was a year ago. But this is real danger ahead. You're looking at the equity markets. The Dow is down nearly 600 points. The S&P lost 1.23%. NASDAQ down nearly 1.6%. And the Magnificent Seven ain't so magnificent. Across the board, numbers are down. And yeah. The metals, Challenger and Gray came out today with their numbers. Layoffs in January were the highest to start a year since 2009. 2009. What was 2009? Oh, the Great Recession, which we had forecast, by the way. We took out the domain name, the panic of 08 and 2007. That's a fact. You can look it up. Go to Google. So this is serious. And when you look at the numbers that they're coming out with, 108,435 layoffs for the month, up 118% from the same period a year ago, and 205% from December last year. We said things were going to get bad after the holidays. It's the same thing that happens during the summertime. Things go stale in the summer, and then when people, after Labor Day, it's reality hits again. That's why you see the markets crashing in October. And again, you go to your Trends Journal, and you see week after week, month after month, year after year, we keep putting in the real job loss numbers and the businesses going out of business.
A Chinese trader who made nearly $3 billion from gold is now betting big against silver. The billionaire investor who built his fortune during the record-breaking gold rally has shifted his focus to silver's explosive rise. The trader, Bian Ning, stays out of the spotlight and spends most of his time in Gibraltar. He earned around $3 billion through bullish bets on gold contracts on the Shanghai Futures Exchange. However, he has also been forced to liquidate some positions at a loss due to the high risk associated with his massive short positions. Currently, he holds a short position equivalent to roughly 450 tons of silver, or about 30,000 contracts. Since last week, silver prices have dropped sharply, generating a paper gain of roughly 2 billion yuan, or about $288 million. Through Zhongkai Futures, his brokerage firm, he began increasing silver short positions in the last week of January. According to exchange data, a significant portion of the Shanghai Futures Exchange's precious metals holdings is linked to positions controlled by Bian Ning, either through his personal trades or products he directly manages for a select group of clients. The SHFE does not disclose the identities of individual investors behind brokerage accounts. Data from the exchange shows that Zhongkai's silver short position rose to roughly 18,000 lots in January. Market analysts say such an aggressive short position reflects growing uncertainty in the silver market. While gold has continued to attract long-term investors as a hedge against currency risk and inflation, silver remains more volatile due to its dual role as both a monetary asset and an industrial metal. This makes it especially sensitive to shifts in global demand, interest rates, and macroeconomic sentiment. At the same time, the scale of Bian Ning's position has drawn attention across global commodity markets. Large concentrated trades like this can amplify price movements and increase volatility, especially when liquidity tightens. If silver prices suddenly reverse upward, short sellers could face intense pressure to cover their positions, potentially triggering a rapid price surge. For now, the market is watching closely, as the battle between bullish physical demand and aggressive paper shorts continues to shape the next major move in silver. Now, smash the subscribe button and turn on notifications so you don't miss our daily recaps.